Hey guys, thanks for following my Substack. It's sort of a side project for me. I want to see if I can put together the option ranges with the ranges for the PT indicator and the JATS LRT lines and the opening range indicator levels. So, sort of putting lines all over the chart and seeing what works consistently during an intraday basis, if there's any edge for getting that. So these quick strike tools are at the CME website. You can just register and get access for this. And I use the ball to ball expected range tool a lot to get an idea of where, if there's any strikes that stand out, like this ginormous level at 13,750. And note the standard deviation levels for this implied volatility and see where the strikes intersect um, at those levels and what they are. Put that on the chart. I'll check the end of the month and do the same thing, especially as you're getting into the close of the month contract and see where some institutional interest might be parked. I like to look anytime a level does hit the volatility line to make a note of what those are. And finally, doing the same thing for the weekly. And seeing where the big interest is sitting and making a note of that and putting it on the chart. Not sure if I got that one. All right. And so then I'll change and go over to the option settlement tab. But there is a wealth of information here. You can create your own curves and pretty fancy stuff. So go over here to the Greeks and look at your gamma tab. That's where the delta changes. You can see that there is a row that's bolded. So I want to make sure I note that level on the chart. I'll draw a horizontal line. And then I go through quickly and just draw a horizontal line at these few gamma flips. 510, 560, 620, 690. And annotate the chart with those gamma levels. And so once you have the chart option lines where the strikes are, you can see how intraday they are used as a support resistance level. And when they confluence, like right here, we had quite a lot going on. We had the LRT lines indicator at the daily daily distribution. So quite a big level to hit for that reversion to the mean, bring it back into the center. And that's basically it. The Bollinger Bands help. The knowing if the range is contracting or expanding helps. And putting this together, going down to a 5-minute chart and seeing if you can get some directional opportunities. And then even a 1-minute chart. I like to use the LRT lines of a 5-minute chart on the 1-minute chart. So I've got a 5-minute chart um, hidden under here. And so I can apply the LRT lines indicator to that 5-minute data, but draw it on the 1-minute chart. So one day I'll get that indicator updated to allow multiple time frames. It's on the to-do list. But otherwise, you'll see how the algos will park price inside the ones. So that is a target area to trade to. You'll find that price sits inside the one quite a lot and ranges up and down. This looked like a nice move though to the PT3. And whenever we get out of bounds, this broke the PT3. That made a really good reverse back up to the PT2. So these breakouts, this one was just a reversal, but a lot of them will turn into bat tails, and you can measure one time the range, and that's generally how far they will go. And these bat tail events usually occur on a smaller time frame, so drop down to your 30-minute or 60-minute or 5-minute chart and try to get those breakouts. But you can use the smallest of the time frame to help manage a higher time frame move. Like I said, a lot of the institutional traders will just focus on these higher time frame levels anyway. So like right there was a weekly touch right here. So I'm sure there were quite a few people jumping on that. So I'll continue posting these online. I've got the high-low 2 template that I'm working on these slopes, trying to get these thresholds worked out and get to a decent level above or below a certain threshold. To allow a trade to occur. Within that threshold. And you can take it actually at any number of levels. The deeper the threshold, you probably want to take these deeper pullbacks because that gives you the maximum reward and the least risk. So those work out really good. And like I said, you can have a very short risk, and so if it rolls over, that's okay. You can get back in on the same bar, so you can set it up so to take the short risk, and then if it did turn around, you could get back in. And that's how I trade. That's how I use it. So trying to get this set up in Blackbird working, and to set this up using a set risk for a combine. And so set it on one contract and see if I can get the same exact, consistent risk reward set up, and see if we can get that combine secured using this method, and then build a small account and move forward trying to get to some larger range targets with the PT indicator. But definitely, being aware of future opportunities when a daily, weekly level sets up like that. Sometimes you just have to bite the bullet because the price is coming down pretty hot into these areas to be able to just, you know, hit the buy button in the middle of nowhere. But you are actually at a very statistically significant level. And that's why those trades work out so often. All right, guys. Well, thank you very much. If you'd like to, again, unsubscribe at any time, just hit the unsubscribe button, and appreciate you. Otherwise, leave a comment, and I'll chat more next week as we put some strategies together. Thank you.